Oh shoot, looks like I didn't have that live thing on for a minute. Checking audio. Mic looks like it's set up. If you guys can hear. Steven, you want to say something?
Yeah, let's just seeing if everyone can hear me, if I'm still echoey.
Hopefully. Hopefully not. Alright, cool. So, just gonna get into this. We got a whole lot of stuff to check out. I am out of the puts, and we are back in the gold trade live and ready to roll. So, I think that's looking right nice. I had somebody DM me this morning and be like, dude, what's up with this pre-market situation? I'm like, get used to it, man. Like
Yeah,
that's very, very, very normal. Uh, yeah, just don't believe what the pre-market tells us. Ever. They lie all the time. All right, so we're gonna get into this. We got a lot of stuff to go over. But if you're new to this and just kind of joining, checking this out, basically every Monday we go through what I call like a weekly trade plan. If you're going to trade for a living or any, awesome, thanks, Mac. If you're in any business, every Monday morning, if it's early or not, doesn't really matter. But before you really get into it, we'll have kind of a quick weekly checkup, and that's really all of this is. Again, any fund that you're running or anything like that, we always have this actually, and we'll have risk managers, the whole nine that we have to answer to. So since we don't have that, we have our peers, and so I got Steven here and a couple other guys that we trade with on a regular basis, just checking everything out, seeing what our plan is for the week. Mostly what is important coming up in terms of economic data and what we need to look back at and see what's going to affect the market based on what happened last week. That said, we are options trading group, so before we get started, I need to point out the options are not for everyone, and you should call 1-888-OPTIONS and get a copy of Characteristics and Risks of Standardized Options before you start trading. So, without further ado, had a lot of headlines, a lot of headlines. I think biggest, you know, things to watch very clearly. We have oil, we have gold, we have inflation, and we have war. So all of those things, if you don't have a war portfolio, I'm sure that your server owners can help you put one together. But Lockheed or LMT, L3 Harris is kind of like my favorite from a commons perspective. Raytheon, RXC, those are your go-to defense plays. Make sure you own some of that. Maybe just buy a little bit at a time. I don't really buy everything all at once. My biggest holding in the equities positions, common stock positions right now is OIH or Oil Services, and then we got all the XOM, XLE, little XLP, consumer staples, just more like trading around that, and a ton of miners, gold, silver, the whole nine. So into the headlines really quick. So International Energy Agency, the IEA, releases 600 million barrels of oil reserves, half from the U.S. So we're talking about there's a lot of stuff going on about the U.S. oil reserves and like, oh, maybe we could pull that in, and that could maybe save us on some oil prices because we're going to be looking at well, at least in California, probably 7, oh god, $7 a gallon probably. Um, yeah, I remember that. Ugh, I'm already paying $100 for a gallon or for a tank that only gets me like 200 miles. I need a new car, but it's bad. Anyways, but here, just when you listen to those headlines, what I would like to what I would point out is that our reserves isn't really that much, right? So right now, the U.S. is buying 670,000 barrels a day from Russia, right? And so that's what like a lot of this big, headlines are all about, right? So Pelosi's calling, a lot of people ban importing of Russian oil. Yeah, we're probably going to do that, but is it something that we can offset at home, like out of the gate? Not really, not even with our reserves. We don't have that much reserves when you take into account how much oil the U.S. actually uses on a regular basis. That's the important stuff. So keep an eye out on that. a lot of the public figures like to make it sound really good, but the fact is that we we use a lot, so we would need quite a bit. There was a secondary boycott from Sector, BP, Shell. That was the initial ones. When I kind of looked into it a little bit more, Visa, MasterCard actually ended up suspending business in Russia. Um, I saw a couple traders talking about RSX options, things like that. So hopefully you guys aren't in any RSX positions. I didn't check it today. I know it was suspended, but you might be able to unwind if you still have them. If it's open. Yeah. Look at that. Bouncing too. Well, that's what happens when you get a halt. So, I think energy is really the biggest thing, right? So, Germany's rethinking their energy policies. There is, I don't know if you guys caught it, but a lot of the live feeds on the Russian tanks attacking that nuclear power plant in Ukraine. That was pretty crazy. We were laughing about it, but yeah, there was a lot of what that could entail, from a world perspective. Is Russia really that stupid or crazy? But I think that reactor was, or at least what they were shooting at, was not active, as far as I heard. A couple other things to note. So China's not going to join the sanctions against Russia. The Russia retaliates with some of their own blocks of Facebook, BBC, a couple other sites. And then this morning, I think it was, they're like, oh, we're going to do a ceasefire. But there were some issues around it. So ceasefire so that people can leave Ukraine, right? Citizens, regular people. But they only allowed them to evacuate basically to Belarus, I think it was. But yeah, you didn't hear that in the immediate headlines, but that was definitely what was going on, and I think some of the issues that you might see in the headlines. But yeah, I think different perspectives wherever you are. That's the market right now. So just be wary. Have a very defensive posture across the board. And be hedged. Right now, your hedges are the gold, metals, oil. I think we've just moved so far, so fast. And don't get me wrong, I love the sector, but I don't know how much more upside in the very near term we could see. Just keep in mind, like at the end of some of these rallies, if you guys were around back in the day, like the end of the post-COVID explosion, we had some of the most violent days, like to the upside, in a row, back to back. I think that was Tesla doing like multi-hundreds a day for a while. But that was kind of like your blow off top. And so I'm feeling a little blow off toppy. I'm not saying it's going to come down by any means. The last support on oil was like $80. So I see right now it's like maybe 107. Very, very mediocre support, but not enough to say, oh, I want to short this by any means. I think usually when markets move quite a bit like this, more often than not, what happens is they actually kind of stagnate for a little while. Sorry, I'm looking at charts. So I would expect some stalling out, essentially. I do think that the gold and silver trade has quite a bit to run, though. So on a good note, right, ADP came out, that was good. Non-farm payrolls came out, 678,000 new jobs created versus 450,000 expected. That's a huge difference. This is not adjusted yet. Side note on the adjustments, I don't remember where I was reading it, but there have been so many adjustments recently, and I guess it's the self-employed numbers that don't get reported at the same time. So that's why, and that makes perfect sense, right? So many more people are self-employed, like myself included, versus what we were, working a W-2. So those are the numbers that are coming in later and adjusting like 2-3 months behind, actually. So that might even be better than what we're looking at. We'll see. I think Powell had couple testimonies last week. There was one I think the biggest thing to take away that the market absolutely reacted to, that he was just very clear there's going to be a 25 basis point hike in the next 2 weeks, and he's still saying he's going to shrink the balance sheet. Yet we have some bond purchases scheduled this week, so we'll see how that goes. There was an Alabama Senator Shelby that I caught some headlines, but he was questioning Powell. I guess he was asking, "Are you prepared to do what it takes to protect price stability?" And Powell says yes, and then the senator goes, "That's quite a departure from what you've done so far." So he's definitely catching some heat for sure. We're also seeing a little movement in the crypto markets from some regulatory concerns. I'm not too worried about that personally. Ooh, this mouse. And that's pretty much it from the major headlines. So again, oil, precious metals, little crypto, and I think those are your biggest plays, right? So if you don't have if you're looking at tech, and if you haven't traded a market like this, and you don't have your go-to staple, equities for this type of market, start looking, because it's not the same things that you were trading before, that we were trading before. It's just not. I don't know that I want to necessarily short the tech sector personally, because again, same thing. It's gone so far down. I don't know how much more downside there is. Doesn't mean that I want to buy it right now, because I don't see it going up. But there are definitely better places for our money at the moment, in my opinion. So that said, just a quick recap on earnings. We got CRM last week. We do not have any of the Dow 30 this week. We've got 29 so far of the top Dow 30 components, with only 4 missing. Which, if you look at it in the last 4 quarters, that's on par for the worst. But still, I mean, it's pretty good. I did not update this slide, so don't mind me. Thursday, Friday is actually going to be our biggest economic data points, and we'll get to it here. So today we really don't have anything to note for sure. So a very slow day, I think. Again, if you're looking at futures and they were blood red when I woke up, it was like, I swear I saw like a negative 600 something point flash on the Dow for a minute. But it was really early, like on West Coast, so it's probably like 2 in the morning my time. We're down 400 points, which is about that's about what I would expect to be the bottom for today, I would assume, or at least level out. I don't see any crazy bounces. This is where you don't want to go and try and trade a reversion or a trade to the upside, because it's probably, trades are probably done for the day in terms of the major momentum, at least until I get to the back half. That said, so moving on to tomorrow, we have a little bit of stuff, nothing major. I think we will start to have some attention focused on our import-export situation. So right now, our last import data point was $308 billion. And again, the U.S. has primarily been a net importer over many, many years. There used to be a note, like a data point on gas, actually, like on oil. Like if oil went up $1, then you would cut X dollars off GDP, because we were such a big exporter. But we all know at this point that we don't have to be this big of an exporter, really, or importer. We can actually be a net exporter, and that would be really good. And I think what people will probably start calling for in the near future. But very slow changes. Consensus to be nil. Wholesale inventories, that's just again like what are the manufacturers like stocking up on, things like that. There's I don't know if it was today or tomorrow, I didn't put it on here. There's gonna be a Redbook number. I'll just grab it real quick. Redbook comes out let's see, Tuesday. Yeah, Tuesday. Redbook is year over year, so that's actually retail data. So there's a number tomorrow that's going to be at pre-market called the Redbook, and that is year over year changes for retail. So there's some retail that's doing good. You can be fairly selective. But I'd say most of the time in this kind of environment, it's typically like you want to be on one side of the spectrum, either discount retail or high end retail, not typically in between. So you'll see things like Dollar Tree, Dollar Gen, Five Below do pretty good, like your discount retailers, and or sometimes your high end retails like your Capri, etc. So, again, all I know is discount I've seen flying for sure. I don't think Capri's been up recently, so maybe LVMH, who knows. So small earnings. I think earnings this week are fairly mellow. We got a couple, nothing major. Wednesday, Thursday are typically our biggest earnings days. Job openings and job quits. So JOLTS. This comes out Wednesday. So again, Tuesday, Wednesday, super light until we get into Thursday. We get an extra bump in earnings. Thursday's the biggest number of the week, so we actually get CPI Thursday morning before market opens. So again, remember we're thinking inflation rates, all that kind of stuff. We have a 30-year bond auction also in the afternoon. So this might be a pretty choppy, rough day for sure. So initial jobless claims, also continuing claims Thursday morning. But this is going to be the biggest day of the week by far. So right now we're looking core CPI year over year. That's the biggest number. Then you have core CPI month over month. The difference between core and non, again, if you're not familiar with this, core does not include things like food, gas, energy prices, the things that are flying right now, because the Fed thinks that is too volatile to measure as a standard gauge. But again, this is the number that the Fed looks at the most, for sure, in terms of gauging what they need to do from a monetary policy perspective. So we're sitting here at the core year-over-year inflation rate is 6%. Consensus sitting at 6.4, so they're still thinking that it's going to go higher. We are looking for peak inflation from an investment perspective. Peak inflation should be when we start to see some turnaround. If this comes in at like a 5, then that could be really, really bullish for some of our tech stocks that are pretty beat up, and also like could unwind some of those defensive plays like your GLD, SLV. Not so much OIH and the defense trades. Look, I mean, do you think that the Russian crisis is going to go away anytime soon? Probably not. And so that's what that's all about, right? So I think those would be less speculative, but have already moved quite a bit. So that's my 2 cents right there. We do have 137 earnings on Wednesday, so we will probably have some trades to get from those. If you went through the IVE sessions, you know how to do that with us. And then Friday, we have probably second biggest, but again, still very small economic data point is the consumer sentiment. So the Fed actually does look at consumer sentiment also. That's like the health of the economy, how willing consumers are feeling about spending right now, like what's the savings rate, all that kind of stuff. So high numbers are good. Anything below 60 is not good typically for the market. But again, so we're looking Thursday morning, core, year over year. They'll release these in all kinds of different numbers, so you have to be careful just to make sure you're looking for the right one. It's going to be core, year over year, and core month over month. Core year over year, that's the big one, comes in below 5. Yeah, that's going to be like fly time for sure, and unwind some of those metals, precious metals type trades. Just because that's where I see a lot of the money going to right now. Just follow the money, right? If it's flying over there and we get a different data point, expect that. So have a bit of a balanced portfolio if you can, if you're going to have anything. Cash is also your friend right now, very much so. Baker Hughes, this is a rig count we get every Friday afternoon. Total rig count and oil rig count, these are just expect these to go up right now. I don't expect that to actually change a lot of the oil pricing. That's going to be more on the regulatory front for sure. So I think this is it. I think we'll have this last one Thursday, and we're off to some charts. So just a quick, I'm going to do a 30-minute chart across the board. So if you're trading at all, this is what your view should look like every single day, right? So first things first, before you start trading anything, you want to have all your major indexes. So you have the Qs, or SPY, Qs, Diamonds, and Russell. Tune Master, you're hilarious. So take a look at this. This morning, I think we could have all seen. Okay, here's SPY, futures down. As long as you have these things, and this is just the daily high low, right? So this was yesterday's or Friday's high. If you see this tagging here, like we did this morning, I mean, we all pretty much knew. Okay, slam that. We don't buy that, right? So again, free market stuff, just always take with a very big grain of salt. What I can tell you, typically, I buy a red opening if we actually open red, and I'll typically sell a green open. I mean, just from a this current market, right? Most of these bounces are going to be sellable. So we are. I'm just taking a quick look. I haven't done anything on the charts. This orange box is the average length of a week. So right here, this would take us down if we continue to move, chop around for the rest of the week, and we hit our low end average after opening right around 430. That would take us to about 418 this week. Keep in mind also, this is a big, fat, broadening range, like megaphone type pattern. We also had, what do we want to do? We got non-farm payrolls Friday, right? Friday morning?
No, that was NFP was last Friday.
Yeah, so last Friday we got it. What time was that? Did we get that? I'm just gonna make a quick note, just because those type of economic like situations. So Friday pre-market, yeah, non-farm payrolls. Yeah. So non-farm payrolls, it would be like an economic data point that will create a technical level. That's why I'm putting this here, and this would be February because it's a month behind, right? FOMC. Yeah. That's fine. So non-farm payrolls here. So this pivot, yeah, there you go, creates another kind of technical level, right? So moving forward, 433, 432 and change. Essentially, this level right here, this is the one to watch. If we're not above this, we are not in an uptrend right now, and expecting that we can go lower is like what you should do in the near term. So 418, does that take us? I'm going to try and draw this back, see if it pulls to any like points of interest. So I do have this little wick here, and yeah, kind of, sort of. Oh, okay. So yeah, so 418, I would see as like a low end for the week. If we do get down here, we'd probably wick something a little bit low. I might see that as like a temporary buyable dip, just to sell on like the next rep. So very, 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 very quick trade. Otherwise, if we get, this is yesterday's low. If we do get a tag anywhere around here, 427.88. I don't know if you guys can see that, and I can pull that back right on here. So in this little box, this would be where I'd be shorting. With the VIX trading at the levels that it is, I'd say like credit spreads to the upside, call credit spreads, will be your friend. A lot of times when you get these rolling downtrends, people will try to buy puts. That's very difficult. I will be like honest with you. Like sometimes, like the what am I trying to say? The premium drains out so fast. If you're not watching, or you don't have some kind of advanced order like bracket, trailing stop, it's going to be pretty tough to make sure that you lock in profits. But typically, selling upside credit spreads using calls, it's like a bear call credit spread. is really your friend. That's where the edge is going to be when Ivy is this high. So that said, yeah, we could get some pretty heavy downside if something wild were to happen. Very similar. So Friday on the Qs. I'm just going to make this. Where is it? Friday pre, right? NFP. NFP, and then so again, orange box. This is right where. So what is this? All right, so this is Friday high. So anywhere in here, see this pivot? Man, Qs tag that pivot almost to a T. So this is that fundamental event that's going to create this technical type level for us. So for, what is this? Round 340. So if you're in here, so what I could say is, if you're in here, number one, you can easily say IV is actually going to be pretty low relative. Might be in the 30s, but that's low relatively speaking. Right here, just because it's kind of reverting, and so that would give you 1-2 days of little change. So you should know, just based off that volatility would be fairly inexpensive. That's why I'd say inside this little box between 340 and like 335, you probably go to buy some puts. Otherwise, quick draws if you're shorting down here. And the easy money is on some credit spreads. Call credit spreads to the upside. So again, orange box, length of an average week, that would take us down to 322 on the downside. Tags this gap almost perfectly. Let's see. Wow, we're so far down. Is that real? And yeah, we're getting close. Real close to it. That would be landing us right into this prior consolidation zone, which would be a typical retrace from there. Otherwise, you can't really look at this chart, this is a daily now, and say that this looks like it's going up. Don't try and buy the dip or catch your falling knife, right? Don't do any of that until you see a trend change. You will not see a trend change here until you're well above 350. So I would be looking at something like that. Look, that might be 20 points from here, but way safer to wait till you're above 350 if you're looking for some kind of longer term plays. Just my opinion. Isn't it safer in CHF? Oh, take a look. CHF Swiss franc, or Swiss. What is CHF?
Yeah, that's Swiss franc.
Yeah. Dude, who's Toon Master? Is that elite? No, probably not. That's our Swiss friend. So IWM last week, yeah, man, that was looking the best to me. I mean, it really was. I wouldn't change that statement for sure. But so we'll just take another one. Got a little break, so we broke a little high, coming down, testing these lows. We'll see, right? It's way early to tell. Still watching this 200 level, 190 something right now. Can we get a wick down to 185? Yeah, but this, my friends, looks like quite the Iron Condor candidate to me, actually, now that I'm looking at it. Wow, this is an entire month's range. What is that? 15 points? 20 points? That's a nice range sitting right in the middle. The only problem I have with opening Iron Condors, and I'm sorry, I'm thinking what's the weekly plan, right? So VIX trading this high, I know I want to be somewhat heavy credit spreads, but how do I do them? And do you do them when volatility is that high? So I don't typically like to do it when volatility is at the extremes, just because that's typically there for a reason, and that's when you could get yourself into some trouble. And we do have a little bit of a black swan event, so to speak, in our midst. But this small cap index, this is very inflation sensitive. So we'll see. To the downside, that would bring us down to this lower end of this trading range, so 188, which is right where this tags support twice already. So can we get a triple bottom? Who knows? If we get a lower or a higher low, that would look pretty good, at least to trade to the top of this range. Can't really say anything else outside of that, just too far out. So here we go. IWM loves to do its own thing. It doesn't follow the rest, so it's not that related, but it will chop for quite a while, and that looks like what we're walking into. So gold pre-market, if you guys were looking at this, gold futures, that was GC, no, GF, no, GC. Gold futures this morning clearing 2,000, right? And you'd be looking at this and you're like, I'm gonna bank, right? And then boom, pulls back, right? So where did it pull back to, right? You always have these levels. It pulled back to right where it closed, bounced up, and now we're long, right? Well, we're staying long. Today, adding to the longs, very likely for me. Thinking GDX, we've opened and closed, I don't know how many GDX trades. I got my eyes on a contract now that I'm sitting on. Just kind of getting ready. But yeah, this is going to be clear above 38, 33 on the day to continue higher. Gold, I will say it's kind of gappy because it trades overnight quite a bit. This is GDX, the minor chart. So where do we go on the last run was 45. We're sitting at 30 with a very clean, let me take some of these old lines off, clean break above. So am I happy with this chart? You betcha, for sure. So that's clean. Doesn't get any cleaner than that, right? Clean above. So continuing trend, don't fret. We're good. Yeah, these type of equities though, you do have to trade a little bit differently. You'll see me do a ton of diagonals on things like this, just what you kind of need to do. At least if you're going to hold something. TLT, I think another Iron Condor candidate, in my opinion. We can take this, again, average weekly range. If you want to slap it right there, brings you down to the low end of the month. Little head and shoulders-y. But the thing with TLT, where I would just say more range bound, probably very good candidate for some type of like Iron Condor neutral trade strategies, is like even if rates are going up, this thing should, because it's inverse correlation, rates up, bonds should go down. Two things with that right now is that there are a lot of rate hikes priced into this bond already, and I mean a lot, like what we're talking, like 5+ rate hikes that are built in, expected, already anticipated in this. So how much further down can it go? It's just a matter of what is the size of those rate hikes. And then at the same time, because we have this flight to safety, when people sell their equities and buy the bonds themselves, they kind of bid up the price of the bond, right? So imagine this is a piece of paper that represents an interest rate. The piece of paper itself has value, just like your option contract itself has value. It's supposed to yield a rate, yes, but the bond trades like an asset, because it is. So just keep that in mind. I think that this will be battling for a while. So another really good Condor candidate, in my opinion, right now. Oil, yeah, 130 in the pre-market. Look at that. I mean, that does look a little blow off toppy for sure. Let's see. Yeah. So, I mean, we're clean above, Morningstar type action here. I'm not ready to short this for sure, but I can see how people would want to do that. I'm just not quite there. Not quite there.
Ready.
No, not quite ready. I mean, maybe, no, I don't even want to touch it like from a trading, maybe intraday, right? Like scalping like we do equities, but it's a tough one. I do want to, so DVC, that's also, so this is the commodity index, very similar, right? So I grabbed comments on this not too long ago. I'm looking at the same thing, right? So if we break below yesterday's probably pivot, 2680, something like that, 2650, then I might trim it or sell. But until that, this is still an uptrend, just like crude oil futures is still just another series of higher lows and higher highs. Even though this is a little blow off toppy, it's still, if this is a low, this is still a higher low. Even if there's a low down here, this would still be a higher low. Anything in here is still a higher low. You don't break trend until you're below, what is this, 10, yeah, like 105. So just keep an eye on stuff like that. So the VIX, we opened this morning, geez, like 35. Nice level. I was thinking open a credit spread somewhere like out of the gate, but there were just too many other easy trades. I think we were like 80% on the SPY puts like pretty quickly. We could call it a day. Sorry, those moved too fast for me to really alert, and half the time I'm building this stuff. But yeah, so I mean, I think anywhere above 35, we are in probably like buy the dip territory from a short-term perspective, or cover your shorts, if that makes sense. And like so far, anything below 30, and again, you can pull this chart back and say, hey, look, the average trading range for the VIX in a standard bull market is below what? Is below 16, right? But we're not in this market, so this is really not that relevant. I do not expect us to be trading in this range anytime soon. So when people ask me, hey, should I buy puts on the VIX? No, I wouldn't be doing that just yet. It's too early, right? Same thing, right? Wait till you see a break in trend. Do we have it? No. For right now, where does the value area put us? It really puts us right in here. I say value. So anything between like 28 and 20, I would be very suspect of the market right now, as long as there's still headline risk, and be starting to hedge. Nah, maybe aggressively, maybe it's your choice, but that's what I would be doing for sure. So we're not quite there yet. This is kind of like in flat zone. So I'm just gonna jump into my charts. We can check up on a couple trades. So we have an Oxy diagonal on. So this is again kind of up here. So Oxy right now, this 30-second. What I would say is that huge headlines on Buffett buying this, while who's the other guy? Pershing Square. One billionaire sold his entire stake. And over the course of the last week, Buffett bought, I don't know how many billions of dollars of Oxy. So this was essentially all Buffett, if you didn't know. So just be aware, like this would be a pretty standard pullback. And I think that our current trade, had protection down to 54. Let me check on it. Oh, it just went south by like 8%. It was open, it was up like 20 earlier. So that's okay. I'm gonna let this chill for a little bit. I expect some chop that's gonna be ideal for that type of position. Might adjust some strikes later on. But I think we're good in general. I'm gonna look at probably a 52 level to bounce here. But again, any way you slice it, higher lows, higher highs. And we had a couple, was it Devon? Very similar. Unfortunately, yeah, we closed Devon, opens at the highs again. Devon has this weird personality where it's like it opens way high, sells off throughout the day, and then gaps up again the next day. So I'll wait till the close to see what we want to do. I'm not too worried about this guy. It's only 61. I think we closed it 58. So didn't leave a whole lot on the table. And I think, yeah, it's probably all right. So what I would say, so here's gold, and I didn't want to take a look at this, so I'm just going to clean up some of these charts. So gold right now, we had this kind of pivot low, right, 184, yesterday's close. As long as we're trading above that, this is still very much an uptrend. Little consolidation this morning, right? I like this, to be fair. I like this a lot. So, not touching my silver position, looking to add more around this GDX. Look at this. If this is going to stay above that, ooh, that looks real juicy to me. Yeah, I like that quite a bit still. No question. So gold, that goes to, my thesis was, okay, so if gold is, ultra, you suck. Gold is going up and oil is either stagnant or trending down slightly, that's going to be the most bullish for gold miners. So we can take a look. GDX. GDX is right in there, and so same thing, right? I'm sitting. What I will tell you is it was the April 38 calls, super high volume this morning for GDX, and I am sitting on them as we speak. There are other ETFs too, by the way. Like you could do. There's a multiplier ETF is called Nugget on GDX. So right now I got 6,000 volume on the March monthly 39s. Ooh, that's real good. Sell those against the 40s or 38s. Interesting. And there was 9,000 volume on the April monthly 38s. So I did grab the 38s. Those 39s look pretty good for the March monthlies too, to me. So I'll tinker around, see if there's something I could put together. But yeah, 39, 40, diagonal. Oh, that's there's a lot of good setups. Good IV that we can pull from, juice it. Here's Nugget, just if you're not familiar with it. Nugget is a 2x multiplier of GDX. This is not an option trader. Don't try and trade options on this. This has got crap liquidity, but you can buy the underlying asset for sure. This is like it's more leverage than UVXY. I think UVXY on the VIX, people are familiar with, is UVXY 1.5? I believe it's 1.5x.
So yeah, I think so.
So UVXY 1.5x short-term futures, so first month future contract. Not always where you want to be, by the way. That's why I don't really like UVXY, because sometimes if you look at the VIX contracts, the volume is like way out in different months. So this is only going to reflect the most nearest data one. Oil, Gush, was the 2x leverage ETF. I know we got some guys that have been playing this. When you want to flip, if you were to flip, right, so drip is the 2x inverse, bear, right, for Gush. So when we decide to short oil, this is how we're going to do it. Just saying, that would be my plan, but not quite yet. Gold, if you wanted to, it's called Dust. That is the 2x bear on the miner ETF. Like these things. And again, these are not investment vehicles. These are all built to go to zero, and then they do like this reverse split. So that's why you'll see like drip is, what was it, like $2, right? Like, yeah. These things, this is how it works. It starts way up here and then does like this reverse split. So don't get, see, it's already planned. 1 to 10. 10 to 1? 1 to 10? Anyways, March 28th, they'll do a split. So this will be 2, it'll be like $28 all of a sudden. We want to check out some equities, like, oh, dumpster fire, what? Facebook 190. Yeah, I don't really know what else to say about this except, oh, see ya. Yeah, no buyers in sight. Super bearish MACD. Ay, ay, ay. Look at this, like 2 blips on a volume bar. And then nothingness.
Just nothing.
That's hilarious. I'm going to take some of these color things off. Too funny. So this is just automated. So yellow lines here are prior week's highs and low. There's a white line and a white line here. That's prior day high and low. Blue line actually is like 3-hour high and low, and there's a purple lines which are prior month high and low. So that's just automated. So if it breaks, so prior month low 190. Facebook's the one I would be super concerned about, right? Like of losing relevance in the future. I mean, I just think people. I had a buddy call me the other day. He was talking about, well, what do I do with all my money? I'm like, dude, there's like Lockheed, L3 Harris, defense, oil, right? Everything that we're talking about. Um, but he's like, he was just stuck in that mentality of should I buy Facebook? And I'm like, or like he's thinking tech, and I'm like, no, dude, like there's nothing bullish about this right now. But what I said to him was like, dude, if we were in the 2000s, the tech boom, and you saw Netscape, AOL, and Yahoo, they were selling off with like serious blood on the street, and people would be like, dude, these are the biggest, the best companies in the Nasdaq. True story. Uh, and what would have happened if you did, think that you were getting a good value back then? I mean, you'd be broke, literally no money gone. So like, I hate to say it, this would be the one that I would worry about losing relevance in the future, right? Like if I were to go, it would be Google, Microsoft, Apple, and that's it. Um, in terms of like where safety, quote safety, would probably be, in my
Yeah, I
opinion.
would not consider Facebook to be
Uh,
a safe
no,
vehicle at this point. I mean, the ad revenue is down across the board.
yeah,
It's
yeah,
and yeah, like you said, I mean, losing relevance is huge for
yeah,
social media, especially with all these new platforms stepping up.
yeah. I mean, they're like very blatant. Like we're gonna spend all of our money on the metaverse,
Right.
and I'm like, well, I mean, okay. I don't know if you're gonna come out on top. Um, you don't know. Right? It's just that's a multi-year kind of investment situation, and even as a quote unquote investor, you don't have like multi-years to be in something. So that said, what else do we want to look at? You want to look at Tesla? I do. Okay, I do want to see AMD. I saw a ton of $100 puts coming out of the woodworks. So AMD, we're well below any kind of support levels here. Well, looks like you have something. 105, maybe here was your initial breakout. What I in my mental memory, I remember this $70 level, and I would think honestly, that's crappy. I don't know. I'm not a bear naturally, um, but if I remember this level, I seriously feel like other investors will remember this level, and if we get a flush, this is the level that flush is going to be. So I don't know. I probably shouldn't say that, but I mean this is just some kind of massive head and shoulders, nothing but lower highs. Yeah, we get a little consolidation, but the news is out, so you have to have a story change in this one for something to actually happen. I don't know if I'm trying. I'm not drawing anything there. Don't worry about that. but yeah. If there was something, yeah, maybe you get this kind of reversion trade, but don't get your hopes up. I don't own any of this. Even what were they talking? Nvidia, probably same. Not as bad. Ugh, or is it? I mean, these things, yes, they're beaten down. What is that from the high? Ooh, 40% on a really good. Don't get me wrong, like love these companies. It doesn't mean I have to like the stock, right? Like it's just stock is not acting well right now. So check back later. No need to like buy just yet. Yeah, you're well below the 200-day. What else do we want to do? Amazon. So this is typically like short lived, by the way, right? So you'll be in your gold, silver, and you'll be killing it while your family's calling you and be like, "Dude, are you surviving?" And you'll be like, "Yeah, I'm killing it." Uh, what's wrong with you, right? They're like, "What?" Um, because they're like in their IRAs that don't have any type of options like that. But yeah, when these flush, it's gonna be hot and heavy, and it's gonna be flush-tastic. Uh, Amazon, I'm actually in the same camp as Facebook. I think they're like peak growth. Uh, and we'll see what Jassy does. He's got this was the other company he was asking about. I don't know. I'm not an RA, so a registered investment advisor. So don't listen to me on where to put your savings right now. But But yeah, I mean, the e-commerce business has never made a dime, and it survives off of AWS, which is like super profitable. But um, I mean, you're pretty much peak growth at this point. Everything else is going to be um, you're just competing with GCP or Google's cloud platform and Microsoft Azure. And yeah, you're breaking down something nasty here. Plus, there's no Bezos here. It's all Jassy. So we'll see. You gotta give it time. Gotta give it time to breathe, figure out what's gonna happen. You got something we want to take a look at, Steven?
I have nothing, dude. I'm looking at oil and precious metals.
Yes.
That's about it for my game plan this week.
Yeah. Well, you know what I did see this morning? Boeing. Oh my God. 176. So it was 177 pre, and it opened at 180. And I saw it, and it was like, it was saying something that wasn't that bad. It was like, oh, okay, 2%. I'm like, this is 2% down from where it was? Like, God. I know I sold my Boeing. So if you didn't sell your Boeing, yeah, this does not look good. I don't know what to say on that one. I would like to say, too big to fail, blah blah blah, but doesn't mean it doesn't trade down to 125 and still stay around. Like that's very very possible. Really fill the gap 160. Oh God, maybe. But yeah, this stuff happens fast, so just get your shopping list out. Let me see. We got some Citibank financials. We're not doing so hot. Citibank, you're kind of getting bottomy. Here's what I'll do. The second chart that I look at is this subsector chart, and this kind of messes around a little bit. I mentioned the red book this morning because we do have. I'm looking at XRT. This is the retail sector. Unfortunately, XRT is primarily made up of GameStop right now, just because their market cap got so overloaded and did not. Wow, that's pretty bad. Yeah, this is not time here either. But maybe the discount stores. Speaking of, what was that call? I saw somebody throw out a call for an AMC $5 put, dude. I laughed so much. It was the best, like the best.
Yeah.
Can I see that happening? Oh yeah, for sure, right? Because you're breaking. Oof, you're breaking, right? What is this right here? Yeah. So next support level is like $9. Oh God. Yeah, this $12 was your major breakout, major, unnecessary breakout level. Oh, what was it this morning? Cohen. Did you hear that? Ryan Cohen. Oh, there it is. Yeah, Cohen invests into Bed Bath and Beyond. Activist investor. There you go. This is another squeeze play. God, look at that thing. Yeah. Should have traded this morning, dude. Oh well. Shoulda, coulda, woulda. I bet you GameStop has it. Wow. Yeah, tradable level. Here you go. 105. Breakdown, retest, fail. So, let me see. Retest to 105, something like that. 110. Careful. Just wait for a lower high. Wait for a pushback and then show you a lower high. You'll see it. We were doing the subsectors though. So let me just clean this up a little bit. So a little blow off toppy. Yeah, XLE, pull back to where we closed. 75 is good. XOM, or XOP, sorry, is this oil and gas sector. OAH, man, this was like the best performing. So OAH, so this is why I look at it. So I go, inside OAH, what are your biggest, wow, those puts are just flying right now. I have no idea what the sector is sitting at, but I bet you SPY is like below 420. OIH. So if I see a sector like this, I'll immediately go, okay. So I call SLOB, Schlumberger. There you go, right? One of the best performing or the biggest portions of that sector. And the second one would be Halliburton. So Halliburton, this is not Halliburton. I hate how it does that. Halliburton. There you go. So those two stocks, very similar charts. This are oil services, not oil producers. Very different. So oil services, I think, probably better than oil producers. Well, Oxy is an oil producer, so just be careful on that. The Oxy goes into here, right? XOP, where the servicers of that oil are an OIH. GDX, yeah, I'm liking this pullback, very orderly. Man, this was our first entry down here. All right, we're just gonna have to come up with another one. We might get a little pullback. I think it was Jesse threw out some notes. I saw this weekend write-up was pretty epic. It was a little much to read, so I might go revisit that, see what he wrote up. But yeah, 37.85 seems to be like a pretty key pivot here. 1, 2, 3, 4, 5, 6, and breakout level to the upside on this last run. That's just this last run. Before that, let's see. And yes, look at this. Before that, this is just a small little run. Yeah, so you're going to run into resistance. If I'm looking at opening a trade, I want to find where am I going to run into resistance. So I will run into resistance around like 42, 40 area. And then, 50 would be great. 55. All-time high is 66. This is way back when, but 2008 to 2000, this is financial crisis here is what we're looking at. 2008, this run up. 17, that's not too far off where we came from. Yeah, and this is pandemic. So yeah, this is definitely a critical pivot on GDX. Look at this. This is the initial breakdown, 37.8. Oh yeah, this is a big time level. So I like this. I like this going long. I love this. So that's going to be my focus here. DVC, this is the commodity index that we're talking about. So you're also doing the same kind of thing, breakout. Has this run quite a bit? Oh yeah, for sure. So can it breathe? Yeah, give it some room. Definitely give it some room. But this is that pivot that we're sitting on right here. Super hard to see and you wouldn't normally notice it, but if you get a bounce next day or two, that's going to be the flag. Like that's going to be the big bounce. Not that this isn't like big move. It's just going to be that continuation. XLE, yeah, this is our Devon here. Yeah, you're way above, I think. Yeah, most of these are just like standard pullbacks. So what would you do in this kind of situation? Probably just take a dynamic support, something like that. And if you get a touch, yeah, it's not much of a pullback. 74, 75 on that sector. Let's look at Devon specifically. See how these look, like exactly the same. I'm just gonna grab a channel, throw it up here. So if we get a channel, pull back to right about where we sold it. If you tag this high, anywhere between 68 or 58, 50 and 60, likely viable pullback in here. It's just outside of this channel. So you're looking something like that. That's a wrap. Not major moves. I think XLP was one, right, that I looked at. XLP was the consumer staples, and this was looking good this morning. I grabbed Altria. because they got dividends coming, and this is just I might still build into this, but this is all-time highs on Altria. This is like tobacco company, so they bought Juul, what have you. I'm not. I still like this from a swing perspective. You probably didn't pull the chart back that far, but it's a nice one to trade. It's similar to like a Devon, doesn't have as much like momentum behind it, so you always want to have some kind of spread. But options aren't really that expensive either. The other one would be Philip Morris, right? That goes into this. This is the next cigarette. Ooh, Philip Morris is ugly. Um, that's a real bad pullback, actually. 93 might make Altria suspect, but wow. You looked at this chart before? I really don't look at this that often.
Mm-mm.
You got a nice little gap, like pull right back to this consult. This might be a viable bounce, or viable pullback, big time. Actually, this is intriguing. I'm gonna look more into this. I'll keep you guys posted. Um, yeah, so that was Altria. Um, Altria, there was two. So MO, we're pulling to here. Which ones did I buy? I actually bought a couple. So I bought, personally, I snagged a 50. So I think if you were to sell, oh yeah, you're at stops right now. Well, you're below stops, but if you didn't catch it, I didn't catch it because I was doing this. It's not, I'm not heavy in this. Let's see, what could we do? I still like it. I mean, I say, I still like it from a bounce perspective. I don't want to buy too much time. And if I look at the chain, super low IV, 33 percentile. March 18th, 55s. What are they doing? 55s. Yeah, I still like it from bounce, like to bounce here. So if you missed the exit on Altria, it's all right. Just wait for the lower high. And to be honest, that's what I do the majority of the time. Anyways, like a stop will trigger, and then I'll just watch it. Probably not the best thing to do, to be fair, but I'll wait to exit on the next lower high and have it confirm a lower high. So, question was, what are the good defense investments right now? So LMT, Lockheed Martin, they just got a deal. I believe it was today, right?
Yes, I believe so.
Yeah. So, where was it? You got some insider selling. Oh, that's earlier. I don't have the headline. LMT. I have to go into an account that owns it. LMT. They got a deal for something. LMT. Oh, it's not pulling up. But yeah, they got a deal for sure. If I'm not sure, then I'll just go over here. Oh, look at that heat map. That's beautiful. LMT wins $870 million deal to modify F-35s. So this is the kind of stuff that you'll see in this kind of situation. So LMT, Lockheed Martin, very good company. It's been on a huge run, so just be cautious, right? So this is a 23% move in the last few days. LHX as L3 Harris is probably like my favorite. I would like to say best of breed. Even without this, L3 Harris is like booming. A little bit more beta, but pull this chart back and it's very good, right? So, would I expect little pullbacks as you come into earnings? Probably, yeah. But you got some room before that happens, and then be cautious of your ex-dividend dates. So if you were looking to get a dividend on a stock, and you look at their payment date, March 25th, you'd have to say, okay, so March 25th is the payment date, and the X date is March 10th, which means that if you want to, you have to be a owner on record of the shares. So shares take 2 days to clear. So if you see an X date on like the 10th, just know that the 8th is probably going to be 7th or 8th, like a very bullish day for that stock, because if you want the dividend, you got to be buying 7th and 8th just to make sure that your purchase clears and you're a shareholder of record to receive the dividend. So little tricks, little things to be cautious of. RTX, Raytheon, probably the cheapest of the bunch. These guys merged with somebody else recently, but they have this Patriot missile situation like product. L3 Harris, I think, is like radio waves, things like that. By the way, like components. But RTX Raytheon clearing 93 was a big resistance for a very long time, and you're clocking all-time highs across the board on all of these. So while Raytheon might not be your best of breed, it's probably moved the least. So not such a high flyer as like a L3 Harris or a Lockheed Martin, just to note. But yeah, look at these breakouts. These are big time breakouts. Look at that chart. I think what else? Those are my go-to. There's a defense ETF. There you go. ITA is an aerospace and defense ETF. So this is like a basket. The reason like I don't do a whole lot of these, as you can see, is like I'd rather handpick the best of breed blue chips of the bunch. So if I have the sectors on watch all the time, but if I know which ones are going to perform the best inside each basket of stocks, why would I buy a basket that has the junk stocks included? That's just my personal methodology. So that said, there are some things like OAH. Yeah, I'm happy to do a basket there. GDX is tough, right? So inside GDX, so you have WPM, Wheaton Precious Materials, same chart, right? So this is going to be, I think, I was just recently looking at probably the most liquid from an options perspective, I believe, with 3,500 calls traded today already on Wheaton. You also have NEM, is this Agnico, or Newmont Mining. There's another one called Agnico. So NEM, with a total of 22,000 calls traded today. That's actually really heavy. That wasn't anything close to that before. That's interesting. And this chart is absolutely gorgeous. Absolutely gorgeous. So put that in the wartime bucket if you don't have it. I put a trade out on something called AU, which is not like gold. It's just this is a miner, super high beta miner. So when they squeeze, so to speak, like this guy flies, and it flies like poof, 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 typically in quick succession. So that's what I was looking for, and we're not getting it, but it was just probably a little rebalance and shock on the industry right now. So poof, poof, yeah, we're still in trend. I actually will I'll probably hold it. To be fair. What else? What was it? Agnico. AEM. There you go. This is another miner. AEM. That's why I get it. NEM. AEM. How many options are traded? 10,000 calls traded on an AEM. But I'm looking at the chain, and looks like they had an adjustment for dividends. So be somewhat cautious. April 55s traded 1,100 volume today, and March, there you go, and March 60s traded 1,500. So what is that? So that is a diagonal spread. That's like this: buying April, selling March, just like that, and that takes advantage of somewhat of a chop situation, paying you on these little drawdowns. That's the way I would want to be in this kind of trade. That looks like a really good trade, actually. Oh my God, my puts from this morning. This 425 puts I bought for like a buck and change are like over $300 right now. What is SPY doing? God,
It's
dump city.
it's a dumpster fire.
Oh goodness, yeah, 420. There's. All right, so sell the green opens is the moral of the story. Don't think that because a pre-market is implying or indicating a specific level that it's actually going to open there. Oh, they're just flying. They're just flying. You can trade this kind of momentum from an intraday perspective also, right? So I have no, I would never say anything bad about doing something like this just because, look, on puts, and this is why puts pay so quickly, it's because not only are you getting the move in your direction, but you're getting the increase in volatility that's helping your long options at the same time. Also, it's like credit spreads are good. Call credit spreads, they're going to pay, but the difference is how quickly you're going to get paid out on those. So if you're the type of person that likes to passively trade, credit spreads are the way to go. If you like to get paid out quickly, yeah, go for your puts. Maybe if you want to go longer term swings, do some kind of put spreads, trading up at this 35 on the VIX. Oh, geez. All right, so yeah, so we got some room to the downside. 418 is downside target. Sometimes we'll hit that out of the gate, and then we just end up chopping around for the rest of the week. I wouldn't be surprised if that happens as well. So you have been warned. And we are officially below. Yep, down 660. That's the number I saw on free market. There it is. Full reversal, except for gold. I want to see gold back up there. Interesting to see bonds. Well, this is that flight to safety. They're buying bonds and bidding this up, even though rates are going higher. It's counteracting what the fundamental movement would be in the bond. Yeah. Don't be long tech. Not the time to catch a falling knife. I think that's it. Do you guys have anything else, or do you wanna check anything, Steven?
No, that was all I had.
Cool. Just double check. XLF. You would think if interest rates are going higher that this would be good. No. No. Remember the market. Someone asked about this. The market prices in future value. So it's already been priced in. It was priced in here. Now it's getting priced out, and they're probably pricing in inflation. So whatever extra revenue they were making or having planned to make, it's now worth less. Oh, I did see. Yeah, here's my list. Oh, look at that. Cost goes up. So percent changers. Fuel cell was one. Super beaten down. If you want to see some clean energy stuff, you could probably take a flyer on somebody like this. Way down here. My last purchase on fuel cell, though, I will tell you, was 75 cents. So, who knows? 350 is not bad, though. I didn't catch that. Charge point, EVs, gas prices. There's some thematic plays. I don't see Tesla's too big to do anything. Slob, SLB, that's that OIH trade. Damn it. Palantir. I don't know. Choppy, you got some security stuff. Oh, I did. Splunk had a pretty good quarter. New CEO coming in, so this would be one to watch if we do get that rotation out, which we don't have yet. Big earnings jump from 114 to 127 and carry a little bit, and now holding. So just put on the radar. It's this Splunk is this major security play. So if you're thinking cyber defense, Splunk would actually be right in that bucket of the real companies that would actually make a difference. Palantir, not so much; they're too small. But Splunk is your best of breed. The product is called a SIEM. It's a SEIM, System Event Information Monitoring System. This is like IoT. Anything that has a monitor on it, like you're tracking any data, it all goes into there. It's called the data lake, and it's organized and put in a way that you can easily digest the data so that you can see weird things happening and respond. Yeah, look at this. HD down from 4. Oh, that's Fastly 15. Yep. There you go. Devin's back in your range. Yeah, so you tag 50. There it is, 58. Looks like those oil shorts are coming in hot and heavy. Solar. Yeah, so I got some alternative energy stuff. QS. Yeah. Some just beat down. This is like $100. Yeah. I bought Zoom at 45. So maybe we'll revisit there. USO. Yeah, that's what I got. Other than that, I think we're good. Oh, steel, U.S. steel. Throw it on the watch. This is a little blow off toppy potentially, but high beta steel trade. Beta meaning like if steel makes a 1 point move, this will make like a 2 or 3 point move. So yeah, big move recently, but Alcoa, yeah, a little blow off top. Nucor is probably best of breed steel manufacturer. Alcoa's got the best connections and deals right now, and U.S. Steel, ticker symbol X, for your fastest Momo of the group. Cool. All right, guys, that's plenty for today. I think we're good. I'll see you later. Adios.